I want to show you how the German market has been performing compared to European counterparts as well as US counterparts, because the outperformance is astonishing. You have the DAX year to date up by more than 20% at this stage compared to the Stoxx 600, the benchmark for European equities, which is up just roughly about 8%. But that still shows how European bourses are faring well ahead their American counterparts, with the S&P 500 just marginally above the flat line year to date. I also want to show you how what are the best performers really in the German market this year, so we understand perhaps a little bit better what's happening in that market. Look at the numbers for Rheinmetall, the defense company, up more than 200% year to date. They are indeed the best performer for the German market. We know that this new government in Germany has announced a lot of spending that is going to defense, so that has propelled that part of the market. But there are other dynamics here. So I want to discuss that with our next guest. She is Laura Cooper, head of macro credit and global investment strategist at Nuveen. Laura, good morning. Walk us through some of the reasons for this German outperformance, because this market did very well last year, and yet it keeps beating expectations so far in 2025.
Well, it's quite remarkable to see the significant double-digit gains that we are seeing in the German DAX. And this is largely based on that game-changing fiscal stimulus that we saw in March come through, with investors pricing in that defense and infrastructure spending. And if we look at the composition of that German benchmark, it really is tilted more towards those defense stocks. As you mentioned, we have utilities, industrials, and those are benefiting not just from these expectations of stimulus, but also around this artificial intelligence boom. And I think that's really going to be, key drivers going forward. I think the question, though, is how much more kind of space can we see of these robust gains? I think given the performance year to date, and as well as some of the stretched valuations, predominantly within that defense space, I think we're probably going to see more tepid advances going forward, but still grinding higher over the medium term.
So are you suggesting that you are a seller, perhaps, of the German market at this stage?
I don't think necessarily this is a time for profit taking. If anything, though, I think we are going to see valuations come back into focus. The German DAX is trading at about 15 or 16 times its earnings, and that is stretched on a historical basis. Whereas we look at other areas like the broader Stoxx 600, it is still trading well below its historical discount to US equities. So there is still a case for a broadening out within the European benchmarks, predominantly as we start to see more of that growth impulse come through and shift away from just that sentiment-led kind of gains. And I think we're also starting to see investors, potentially dip back into U.S. equities. We've seen very robust earnings from the tech space. I think that's going to probably entice more people back into the U.S., where it's really been kind of piling in Europe trade already year to date.
It seems, however, that the narrative at this stage is more the diversification, right? So even if you tap a little bit more into the American market, you still want to have some exposure to what's happening in Europe. But I would like to get your thoughts also on the currency element of things, because some companies in Europe have complained really about the strength of the euro in recent times. I'm wondering how much a risk that could be for some of the German exporters and more broadly for the outlook for European equities.
Yeah, it's a great question. I mean, certainly the composition of the German equity market is largely composed of those export-oriented sectors. And the fact that we were seeing the euro trade above 115, I think that did suggest that we're going to see potential margin compression come through as those exporters really have to absorb some of the cost of the currency. I think, though, we've seen some relief on that front, but over the medium term, the key question is, are we going to see enough demand, certainly from the defense spending come through, that will kickstart that new investment cycle in Germany, which would be much welcomed. And I think at that stage, perhaps that growth will more than offset some of those costs to allow for that profitability to come through in German corporates. And it's one of the reasons we still do like German equities, but on a medium-term basis. And I think just the valuation from the performance year to date just warrants a bit more caution.